Welcome to the Modern Wealth Channel. My name is Roger, and today you're watching video number 4 on the most proven way to make money in the stock market. My goal is to make you money in the stock market, and the best strategy, hands down, is to buy the entire stock market, to keep buying and almost never sell. The technical term is passive index fund investing, and it is without a doubt the most proven, reliable, and stress-free way to invest and make money. Why does this work? Because it's based on one undeniable truth. In the long run, the stock market is only going to go up. The stock market may not go up next year or 2 years from now, but I guarantee you 10 years from now, it is going to be much higher. Good businesses innovate, grow, and become profitable over time. You're betting on the United States to grow, and since the US is just pumping up assets with fake internet money, that is a pretty good bet to make. When you buy a stock, you're betting on one single horse to win a race. But with this strategy, if you buy an index fund, you're betting on the race itself. And data backs this up. Most large cap fund managers, people who get paid to pick stocks, have done worse than the S&P itself. 85% of managers have done worse than the S&P. So you are better off just buying the S&P, letting it ride 10 years, than paying someone to do worse than the S&P itself. If you don't know what an index fund is, it's basically multiple stocks put into one group. So the most popular one in America is S&P 500. That is 500 of the most successful public companies put into one basket. So if you buy S&P 500 index like the SPY, you're buying 500 different companies. You're buying a slice of the American economy. You're instantly owner of 500 different companies. And that's basically the golden rule. Don't put all your eggs in one basket in investing. All right, let's talk about the pros and cons of doing this strategy of buying an index fund. The cons, let's start with the cons first. It's not sexy. It's not fun. You're just passively buying something. You're not really watching it. Some people don't want that. And it takes a long time to do. You have to be on the younger side for it to actually grow and make a big difference. Now let's talk about the pros of this strategy, which outweigh the cons. Basically, the most important one is you're utilizing the power of compound interest. Now, if you remember, Albert Einstein had the biggest brain. You got to listen to Albert Einstein. He said, compound interest is the 8th wonder of the world. And this includes using an index to make your money make you money. Let's run a hypothetical. If you invested just $500 a month 30 years ago into the S&P 500, you would turn $180,000 that you invested into $1.7 million. And that's just 30 years, and that's just in the S&P 500, putting in $500 a month. Your money isn't just growing, it's generating its own returns, creating an exponential curve that starts slow and then explodes upward. This is the snowball effect. If you put a snowball on top of the mountain and you take a ski lift down 30 years, when you get down, that snowball has turned into an avalanche of money. And if the stock market crashes like it did during the pandemic or 2008 financial crisis, you can keep buying that index fund because we know over time that the stocks just go up and to the right. Even if a year or two it goes down, it continues to go up. So that's basically the strategy, a slow roll to wealth. It's very powerful. It takes time, but it is proven, and it is the most efficient way to make money in the stock market. It's not for everyone. Some people are making millions on meme coins or making real quick money on picking one stock and getting lucky or knowing their stuff. But I would encourage you to build a foundation of doing this first. Let's say you have $10,000 ready to invest. Put $2,000 in an index fund, or if you're dollar cost averaging, put $200 a month into an index fund to have that foundation in case something else goes wrong, you lose money elsewhere. You always have that foundation that is building over time, and you know you have that safety net. I personally need that gratification. I'm a day trader, I'm a swing trader, so over half of my portfolio is doing that. But I always have that foundation of at least 1/3 of my portfolio in an index fund and something that I know is growing over time and I don't have to worry about. So I have my excitement, I have my fun too, but I have my safety net there. A lot of people lack patience. We're wired for instant gratification, and that could be a downfall because if you're buying stocks and you see it goes down, even if it's a great stock, then a lot of people are going to sell, or a lot of people are going to FOMO into bad stocks. So it's easy to lose money in the stock market. But with this strategy, as a beginner especially, you are going to make some money. All right, guys, with the first video of my series, Stock Market for Beginners, I told you why you need to be in the stock market. Second, how. Third video, which platform to use. And in this fourth video, the most proven way to make money in the stock market. If you're a beginner and you don't really want to get into the stock market, you don't have time, you got a lot of other stuff going on, then these are the only 4 videos you need to make money. Put $100 a week into the stock market, into an index fund, and you will be wealthy. But watch video 5 if you want to learn how to stock pick and how to get wealth a lot faster the smart way. Thanks for tuning in. Subscribe, like, stick to the channel if you want to become wealthy, because I'm gonna help you do it. Peace.